So the market is crashing and it's really hard to know what you should be doing to actually make some money in this market. So I've actually taken a different approach and I decided to do more research. The crypto space literally never rests and there's so much things that are happening. Maybe I've turned a blind eye to this, I don't know. But there is something that I want to share today with you that I think could change up the way in which you trade. Without further ado, I am of course the most open-minded investor / NFT artist on YouTube with a diverse appetite for risky asset classes ranging between shopping centers and shitcoins, but not government bonds, creating contact-led, family-friendly, cookie-accepting, cat-free, technical and specialized tutorials and guidelines to harness the generational wealth transfer found in crypto trends that allows for the believer Jesus Christ and a Fantom Gary and extremely well-educated and multilingual Korean opera with hair naturally curly than the average Asian male and highly coveted by many moms and daughters, also known as Humble Kim. And today we're going to actually think about what's going to actually make us some money. First of all, I watched this video by Tech Lead and I really recommend you follow him and have a bit of a look at what he does. He does have a technical edge and there's all this saga about him creating this million tokens or whatever it was. And what I do know is that there's no such thing as a right or wrong answer with cryptocurrency. The right answer is the one that actually helps you make you money and the wrong answer is the one that loses you money. And that's also predominantly centered around the way in which you make your decisions to invest or sell. So that being said, I'm just gonna have a quick look at the market. So the market situation right now, looking at the past, it looks grim, but looking forward, it's actually not particularly that grim. So if we look at the charts right now, the overall trend is a downward trend and there may be another sort of finish to the actual downwards wave to that $29,000, $30,000 support. All right. Or it may bounce up to this region and that would happen from bouncing off this overall trend line that we're looking at as well. Now, obviously, if we break this region here, then we may actually then start to do a completion of that impulse wave, which then, could then continue onto further waves, may get us then on the $100,000. We don't know. But the thing is, this is an interesting zone and there's no really point on speculating whether it will go up and down. We just have to watch and see which levels it will test. I think if it were to test those lows that we experienced last year around that May throughout the July period, then I think we'll see a lot of buy volume coming in. And of course, watching the price action actually clear above this yellow line here, which is at early $40,000 zone, I think will be a good signal that we're actually on a trajectory upwards. That being the case, everything's down at the moment. Like, I cover Floki as well, and Floki is down as well. But today I want to focus on DeFi. We're going to follow where money goes. Okay, so here is DeFi Llama. It's a fantastic website to actually keep track of what is going on within the DeFi space. Here's a really helpful graph that shows us what kind of TVL we're looking at across the different chains. And as you can see, the market share for Ethereum has been dropping and the new new chains are actually coming in. And it's really interesting to see, even like back in February, when we thought like DeFi summer has already happened, according to United States, February 2021, Ethereum still had a majority of the market share, meaning that a lot of these DeFi spaces, especially the bigger ones like Binance, for example, it did really do quite well throughout last year and it will probably continue to do so. And Ethereum, I expect to, in terms of DeFi and TVL, I do expect it to drop down because of its predominantly super high gas fees. That being the case, one of the metrics that I want to actually point out today is MCAP over total value locked. So total value locked for Ethereum is $114 billion. That is the denominator of this metric. And of course, the market cap is the numerator. So if this number is big, that means that it has a lot more market cap than the total value locked. So 2.7 is kind of a standard. Why is that a standard? Because that's what Ethereum is. And Ethereum is kind of like leading the way in terms of DeFi. And it seems to be that equilibrium, kind of like your price to earnings ratio, right? So if your PE ratio is too high, it's overvalued. If your PE ratio is low, then it's undervalued. And we compare it against the other stocks within that similar industry. So for example, within the tech industry, we see a higher price to earnings ratio, whereas some other industries, we might see a lower price to earnings ratio. So that being the case, 2.6 looks like the standard that's leading this metric here. With that, we do see that there are some lower market cap to TVL ratios, like for example, Fantom, which is only at 0.57. So what does that mean? That means that the market cap could actually go higher for the amount of total value locked money that is within this particular blockchain. Does that mean Fantom is going to go up? Well, potentially. What about things like Binance Smart Chain? Well, it looks to me that the price is really overvalued compared to the amount that is total value locked as well. Avalanche in that similar token is a little bit lower, and Polygon probably at 2.5 sits probably appropriately at the level as well. Kronos is a little bit overvalued according to this metric. Polkadot is definitely super highly valued as well. So if we look at some of the interesting ones, for example, like Solana sitting at 3.7, it is above the mark as well. This TVL and market cap is actually a pretty respectable metric to look at, because I've done some Photoshop, and yes, I got this idea from Tech Lead as well. He's got the same kind of stuff as well, but I've done it my own as well, just out of interest. So this is the AVAX. So this blue line here represents a TVL. The green graph in the back is your coin market cap and the price action. I've lined it up on the same time frames as well. And as you can see, the total value lock, as it spikes, that's actually a really good time to actually invest into the native token because it does follow. So it is what's called a leading indicator, right? So if we actually use the coin market cap, there's a lot of good information on here and people are looking at this a lot, looking at, market cap and everything, but there's nothing useful here when it comes to making your investment decisions, right? But as you can see, the TVL that we look at through DeFi Llama actually shows really good indications of a leading indicator that shows that we've got price action to, that's going to follow the amount that is locked up into the DeFi protocol. So as you can see, Matic is behaving in a similar way as well. Matic goes up and then the price then follows, and then TVL actually drops off. And that's another leading indicator for the dropping off in the price as well. I found Ethereum particularly interesting because that's like the standardized litmus test. So when Ethereum TVL increases, that it was a leading indicator for the price action to increase as well. So the Ethereum dropped, but the TVL actually increased. So right now we're in a situation where Ethereum has increased in TVL, but the price has dropped as well. These could be a really good indicator for trading. But in saying that, you're going to see just how much I am avoiding Ethereum as a blockchain when it comes to doing the DeFi, DGen play or DeFi game that I'm about to show you that's going to earn you lots and lots of passive income. And that is predominantly to do with gas fees. Okay, so that being the case, what we're looking at is the TVL ranking. So one of the strategies that I like to play is we go to TVL rankings and go to recent and just have a look through the recent rankings. And going through the recent rankings, we could have a look at some of the TVLs that are nice and high. I don't want to see the low ones. So going back to that Tech Leads video as well, he has this course for DeFi. I haven't looked into it. I presume that he goes through the details of this. So watching that video was helpful to me. But the thing is, I actually had to try these things myself. And this video, I hope to then give you a bit more insight as to like what are some of the mechanics and then also how you can actually go and chase these gains here. So one thing I found was 0x down. And obviously like 9,000 TVL, that's way too low. You're going to have some issues with liquidity. So I'm looking at something that has a really high TVL, and 300 seemed like a pretty big number compared to the rest of them. Okay, so that sort of narrowed the search. I'm not here going through every single token to actually find out what it is. In some way I do, but I start with the bigger ones than the smaller ones. So 0x DAO is what I found. And so clicking into that, we see that the 0x DAO TVL is actually increasing quite significantly. It was obviously recently launched and it's climbed to 320 million very, very quickly. And so I visited their website and going to 0x DAO Fi, I looked at the TVL and the market cap that sort of lined up. I need to connect the wallet, but as you can see, the APRs are sitting at $2,400 as well. Now, that's not the only thing that I would look at to actually invest into this coin. I would actually particularly look at the actual cryptocurrency price action itself, because when you do provide liquidity as a pair, sort of 0x DAO and USDC, you need to look out for the price action as well, because if then 0x DAO drops, well then, what's the point of making those earnings, because you're just going to lose whatever you gain through the APR yields and stuff like that. So on a daily basis, 16% up, it's not like a soaring graph. So this I would feel a lot more comfortable investing in. And, it only launched recently and it looks like it's sitting nicely around that support as well. So even if it was to sort of drop, say about 10% or whatever, you can still hold something like this for, maybe a week or two. These are obviously very, very short-term strategies, of course, right? So we look at SpookySwap, which is the Fantom network. And how do I know that is a Fantom network? Simply go to DeFi Llama and go click on any of these chains of Fantom, and you'll be able to see the top dexes that are within that. So SpookySwap is the number 2. So I'm in SpookySwap, looking at the pair, we can see all the liquidity and the fact that the liquidity is actually rising on a daily basis, which is encouraging to see. So another strategy is that you want to go to CoinMarketCap, arranged by the largest volume in the last 24 hours. Obviously, you want to go a fair bit down the list because you want to, go for the DGen gain. So found Radio Caca. There's a better strategy around this, and I'll share with you in a minute. But Radio Caca, just make sure that it is available on Binance, because if it's on Ethereum, your gas fee is probably not going to be worth it anyway. So looking into Radio Caca, now that I've seen this, it's probably going to be available on PancakeSwap. How do I know that? Just go to dextools.io. Search Caca, and then RACA, sorry, not Caca. Press RACA, and then you'll be able to see that there's a lot of holders here, and and I come into this. Liquidity is 12 million, daily volume is 5 million, so nice and safe there. BUSD RACA, and it's available on PancakeSwap V2. So go into the farms, look at RACA, and then your APR is sitting at 136%. Yay. So that is what's up. Looking at the RACA pricing as well, 17% up on the day. Looks like it's sort of climbing out of there, although it is a general downtrend. So this is, again, something that I would hold probably for a week, But looking at the overall 3-month chart, we're actually on the low end rather than top end. So this is something that I would consider a little bit safe to do. Now, every day you look at this list, it's going to look different for you. So DeFi is very much an active game in cryptocurrency trading, but it is one that could actually generate you some pretty good passive income as well. So, and obviously it gives you plenty of opportunity to take profits as well. On a day like today, when RACA has gone up 17%, it'll be a pretty good time to get out as well. So another strategy that I like to do is I go check out the recently added coins on CoinGecko, and I sort of look through the list and I look at the chains here. So I'll stick with the AVAX and your Binance, because Ethereum is just not going to be worth it very much. So looking through the list and sorting by the highest trading volume, I've stumbled upon DIFX, DIFX, which was a Binance Smart Chain one, I believe. There we go, Digital Financial Exchange, so BSC. Grab the token address, go chuck it into dextools.io again, see where it's available. PancakeSwap, go to DIFX. And the way we find this, you go to info on PancakeSwap, and then search pools of tokens. And here you can either type DIFX. There could be many other cryptocurrencies that have the same title, but in this case, there wasn't. Make sure that there's plenty of liquidity available in a particular pair you're looking at, and then you'll be able to see the LP reward and APR. And obviously you want to check the DIFX price action, so it's not sitting at the top where you can actually lose a lot of money. That was a problem with Time Wonderland, wasn't it? Because you went from like $10,000 per coin to now it's down to $300. So a lot of people did get in the $9,000 to $10,000 regions without taking any profits. So there's almost 100% loss in any people's investment, no matter the size of their investment as well. So that's what I found on DIFX. Okay. Another one that I found on that list is AlphaDex. So here we've got AlphaDex on the Moonbeam blockchain. And so I've grabbed the token address, and then I went to the AlphaDex IO, and then I saw that there's a raw farm sitting at 2,146%. So that's another, short-term gain that you'll be able to get into. And lastly, one strategy that I did look at is obviously go through the trending in CoinMarketCap and then sort by the highest volume. And then I actually stumbled upon SpookyShiba. So what you're looking at here, I think a volume of about, $1 to $2 million is sort of enough to look at if you're going for the real DJ ones and you want the market cap to be as low as possible. So no shit, and SpookyShiba had some pretty low market cap. So I looked at SpookyShiba. So we're looking at the price action. It seems pretty sort of stable around about that region here. I do expect a lot more volatility with this one, but it sort of stays within that region, which is not so bad. And then so looking at SpookyShiba on dextools.io. Dextools.io is available on different blockchains as well. So, Fantom, Avalanche, and Polygon is definitely useful here. And just search that up right here. You just copy and paste that contract address straight to the dextools.io and check where the liquidity pair is available. And then boom, their LP reward is 72.91%. Against the wrapped BNB as well. So that being the case, these are some simple ways to actually make some pretty DJing gains. Now, I've done this round of research today for you guys on today's video. And, to be quite honest with you, for how much risk I'm taking, the reward and APR rates that I'm looking at are probably not the most sexy, but do understand that when you do your research for DeFi, you will come across different APRs on different coins and tokens that you'll be looking at on that particular day, because these are very much recent tokens that we're going after. But coming back to the initial point that I was making, I cannot stress the importance of MCAP and TVL. If you're a long-term trader, and there are benefits of that as well, of course. When I say long-term, you should still be looking at sort of medium-term, because if we look at, for example, just the pure price of Ethereum, the bull runs for Ethereum is just in relation to the leading indicator that I've mentioned, which is the TVL, really lasts, about 4 to 5 months, which isn't particularly long-term in a grand scheme of investing into assets, but it is long-term in the grand scheme of obviously investing into cryptocurrency, because people like quicker gains in this space. That being the case, watching this metric is a fantastic strategy. Keep the MCAP nice and low and make sure that I work with TVL that's nice and high. See, Fantom is pretty low. Look at that. And another benefit of Fantom is I'm not sponsored by Fantom or anything like that, but just objectively speaking, Fantom's TVL is, continually on the rise. And that is a great indicator that the market cap is sitting behind it. And so I think that would be a good indicator. Another beautiful thing about Fantom is that it is EVM wallet compatible, which means that you can actually add the Fantom network to your MetaMask wallet, which is ideally what you want to do, because that's what people are using. 95%, I don't really know the numbers, but a big chunk of cryptocurrency wallet activity happens on the MetaMask. So that being the case, it's got that volume in there. And on that similar token, I would also like to mention that, things like Solana, for example, Solana is now coming up with an L2 solution where there's going to be EVM compatibility, so MetaMask compatibility. But before it was sitting on Fantom, in its own wallet and things like that. So I don't know. I think in that, like, these are some of the things that we should be looking for when it comes to DeFi, and make sure you do your own research and make sure you line it up. I mean, do these exercises yourself. It would really change the way you look at DeFi. This is an easy tutorial. You can just go on YouTube and find some of these, changing opacities and layers kind of thing. So go through these exercises so that you can actually feel visually how DeFi works, right? You want to follow the money. Okay, so total value lock means when money flows into the DeFi protocol, well, then the native token will rise as well. I think that goes without saying. And this is one of the most logical ways to invest. Yeah, go check out the video by Tech Lead as well. If you want further details around this video, feel free to leave the comments down below. I would like to make some more videos on it. And of course, I've had a bit of a change in the studio here. And so that took a little bit of time, and, sort of moving things around was a bit of a kerfuffle, but here I am making content again. Thanks so much for tuning in today. I love you so much, and I hope you get rich sooner than later. And if you haven't done so, go mint one of my NFTs if you want to. Much love. Peace.